Hello and welcome to Market Fatafat. I'm Sharad Dubey and joining me is my colleague Ankita. So of course our market is showing a tepid move, and Ankita, how the market's actually looking like Nifty bank levels? Selling pressure coming in after Trump's comments?
Yes, absolutely, Sharad. In fact, yesterday we were gloating about how we're managing to hold on to this 24,700 levels. All those gains have been given up. In fact, we are at the lowest point of the day for Nifty and Nifty Bank as well. 24,600 is where we are at as far as Nifty is concerned. Trading with cuts of almost 0.5% coming in on Nifty. Nifty Bank also trading with cuts of more than 0.5%, 6% cut coming in on Nifty Bank, both at the lowest point of the day. Broader markets have also given up their yesterday's gain. In fact, mid cap is down 0.6%. Small caps also trading with cuts of almost 0.1%. Those small caps are outperforming, the rest of the pack. But nonetheless, we do see a red coming in on the market. Advanced decline ratio tilted in the favor of declines. And as far as the sectors are concerned, it is just the auto that is probably holding out in the green, just very, very marginally with uptick of 1.7%. But the rest of the pack is reeling under selling pressure, especially Nifty Pharma, that's down and out 1%. So largely, for now, the market breadth looks tilted in the favor of negatives, Sharad.
Well, yes, Ankita, and in these negatives, of course, we are trying to find positives as we are wearing the green color as well. And I think joining us would be Deepak Singh, Raj Deepak Singh. He's the analyst at derivatives at ICICI Direct. And from our research team, Kanishka is there from our Delhi studios. Good afternoon, Raj. What are your views coming for the market?
Afternoon, Sharad. Right now, what we can see a distinct selling pressure from the FIs, whatever the reason it might be. But what we are experiencing, that the same is going on since mid of July series. And as of now, if you look at the FI's net short position, they haven't changed despite the rollover action, and the call writing is much higher than the put writing. And obviously, unless we are not moving beyond a certain levels or we are not able to close the call basis, perhaps upside may remain capped. And in that scenario, it would be better even for the Nifty to remain on a sell-on rise instead of buy and decline, because in such a scenario panic may come at any point of time. And if you look at, despite Nifty has given up almost 1,000 points, your volatility index hasn't moved up at all. So what we believe that there is a further room for the volatility index to jump in, and perhaps in that scenario we may see a cut of 1%, 1.5% in a single day. So that might be a day when we can think about, okay, now Nifty is bottoming out. But as of now, there isn't any indication that we should be looking at buying it or look at any immediate support levels.
Exactly. There is basically no trade when it comes to Nifty or even Nifty Bank. But let's move on to a place where the stock is buzzing. Top gainer in the Nifty index, IndusInd Bank. A very important news flow coming in from there, as Rajiv Anand has been appointed as the MD and CEO of the bank. And of course, this appointment is going to be for the next 3 years. There was an important gap up opening coming in, but in the day's trade, we are seeing some gains have been paired, but still the stock is up almost 1.3% in the day's trade. Now, looking at the history, Rajiv Anand has been the ex-deputy MD for Axis Bank, and a very strong, you could say, that his overall history when it comes to the banking space, when it is wholesale banking, retail banking, and even digital banking. And he has done really well when it comes to his previous employer, which was Axis Bank. So the street is giving a cheer, and IndusInd Bank also, some broking upgrades are expected to come in, with the clarity coming in the top management as well. But speaking of banking, of course, we would be focusing on Axis Bank as well, as the new era begins for this Rajiv Anand, and he is the MD and CEO for the next 3 odd years. Now, what will be the investor sentiment like, and how will the bank augur under his leadership? To get an idea about this, we caught up with the former MD and CEO of Axis Bank, Shikhar Sharma, who was her ex-colleague. Listen in.
I think ultimately, as far as investors are concerned, they will respond, I guess, in the moment, and that's always hard to predict. But what I'm confident about is that Rajiv will set clear goals, and those goals will probably be ambitious but realistic, and move towards them. And as investors see that delivery happening, that's what's going to bring the confidence and get investors back. So when the turn happens is always hard to predict. Sometimes investors will move very quickly. Sometimes they'll take their time. But what I'm confident about is that with Rajiv at the helm, you're likely to have very few missteps, but you're likely to see the bank leverage its current strengths, but get ready for where the big opportunities are tomorrow. And I'm sure you will get that mix right.
All right, so that's ex-colleague for the currently appointed MD and CEO for Innocent Bank, and that stock is in focus on the back of a new era that is about to begin. But let's come to you then, Raj Deepak. General Stainless is what you've picked out for us on the charts. Talk to us about what do you see on the charts. Do you see good performance to continue amid positive trends that are going on for the steel pack?
Right. What we believe that, while this selling is particularly limited towards or the primarily focused for the among the heavyweights, but couple of the metal names and particularly in this ferrous names, they are performing relatively better, move beyond their call bases. We have seen long additions in general stainless, so perhaps still it is holding above 710, 715 odd levels. There is likely chances that the stock is moving towards 770, which is going to be a immediate hurdle for the stock.
All right, moving on to the next counter then from General Stainless on the charts to the next counter that is in focus on the back of its earnings, and that's Kansai Nerolac. That's an earnings candidate. Now let's take a look at the snapshot of how it performed. As far as the net profits are concerned, that is down 4.3% on a year-on-year basis, coming at 221 crores. The revenue saw a marginal uptick of 1.4% on a year-on-year basis at 2,162 odd crores. The EBITDA was down 8% on a year-on-year basis, and the margins also saw a downtick of 143 basis points at 14% versus an earlier 15.5% from a year ago period. Now, as you can see, that is coming. The pressure is coming in on the stock, selling pressure of more than 0.5% coming in. Now, the Indian paint industry is estimated to be around 77,000 odd crores in the month of March 2025, with growth in the infrastructure and core sectors, automobiles and real estate expected to positively impact demand in the long term. Kansai Nerolac has also approved further investment of 9 odd crores in the Sri Lankan subsidiary Kansai Paints Lanka Limited. So that's another piece of news flow that's coming in on Nerolac. But on the back of weak set of results, Kansai Nerolac trading with cuts of more than 0.5%.
Well, yes, weak earnings and pressure coming in the stock price as well. ABB India, the entire capital goods themes stocks have been falling, and weak set of numbers coming in. Kanishka, what are the brokerages making out of these earnings? Are there any cuts in the offing?
Absolutely. Brokerages have turned very cautious on ABB India after that weak results that we saw over the weekend. That result has prompted sharp earning downgrades and also reduced target prices, even as the long-term view that somewhat remains constructive. Let's start with Motilal Oswal, that has maintained a buy rating but cut the target price to 6,000 from 6,700 earlier. The brokerages warn that weakness may persist due to continued margin pressure and slow order inflows both from the private as well as government sectors. It has also slashed earning estimates by up to 15% for calendar year 2025. Nuvama, that has also downgraded the stock to hold from a buy call earlier, lowered the target price to 5,400 from 6,650 earlier. It has also cited a lack of large ticket orders and sustained margin concerns. It has also trimmed EPS estimates by 11% and 9% for calendar year 25 and 26, and also cut the valuation multiple. Lastly, we have Antique, which has also reduced its target to 5,863 rupees from 7,040 earlier, while it has maintained a buy call. Now, that expects near-term pressure to continue and has trimmed earnings estimates by up to 20% for the next 2 years. So overall, while the long-term theme remains, brokers are now looking for a revival in large orders and margin improvement before any kind of re-rating can occur.
All right, so that's ABB on the back of weak set of results. But Rajdeepak, you've picked out L&T from the same pack. L&T had delivered a rather good, solid set of quarter numbers as opposed to ABB. On the charts, how do you see L&T faring?
What we have experienced in last couple of months, that it has been largely in a narrow range, wasn't able to surpass even 3,600 odd levels. There was huge fall writing, but post result not to just move beyond that range, but even we have seen these call writing positions are shifting to high strike. So what we believe that in a scenario when the financials are particularly under pressure, stocks like L&T, they are likely to provide cushion to the market, and they may take even Nifty higher in case of there is an upward movement in the Nifty. So perhaps L&T tend to move towards 3700, 3750 in the coming sessions.
Important levels to watch out for when it comes to India's largest infra company. L&T stock is trading in the green. Also, telecom segment, also the telecom infra ancillary space. These stocks would be in focus, especially as Department of Telecom has slashed the security test evaluation fees. Stocks such as Bharti Airtel, Bharti Hexacom, Sterlite Tech, and all this list of telecom ancillary stocks would be in focus, as this would be positive going ahead. And do remember the security test evaluation fees that has corrected by 95%. So that actually helps reduce costs for the telecom ancillary players. Apart from this, recently the telecom ancillary stocks were buzzing on the news of Bharat Net 3 orders, but then after that they have gone under a consolidation. But now a small up move is in the offing. Today itself, Bharti Airtel and Bharti Hexacom will be reporting their results also for the first quarter. It's expected that Bharti Airtel's numbers would be coming on the positive side on the back of subscriber addition as well.
All right, so Bharti Airtel, Bharti Hexacom, the telecom players are in focus on the back of that. But let's talk about a stock that is absolutely down and out today, reeling under selling pressure, and that's Triveni Turbine. That's out almost to 7% in trade today on the back of weak set of quarter one results that it has posted. Now, if you look at the net profits, that's down almost 9.5% on a year-on-year basis at 65 odd crores. The revenues are also down almost 20% on a year-on-year basis at 371 crores. The EBITDA is down 23% at 74 crores, and the margins have also declined to 81 basis points at 19.8%. Now, Triveni Turbines, so they have also launched India's first CO2 based industrial heat pump and chillers, and offering higher temperature, energy efficient and eco-friendly HVAC solutions for domestic and international markets. So that's a new launch also that they have announced. But on the back of weak set of results coming in for Triveni Turbine, that stock is down and out almost 7% in trade today.
Yes, it's an accident of the day, you could say. Earnings were on the weaker side. But Kanishka, Tata Motors, another important appointment coming in. What's the significance of this appointment? If you could lay this list down.
That's absolutely right. Like you said, Tata Motors has announced the appointment of PB Balaji, its current CEO, as the next CEO of JLR, and this will be effective November of 2025, that is this year. Now, Balaji will succeed Adrian Mardell, who is retiring from JLR after 3 years with the company. Now, Balaji, who is currently serving as the group CFO of Tata Motors Group, he brings over 32 years of experience in the automotive and consumer goods industries. Now, he has held this position since 2017, November of 2017. Now, the street, initially there was a positive reaction. However, amid the overall negative trend in the market, Tata Motors also continues to trade in the red, down about 0.1% at this point.
All right, so that's Tata Motors. In keeping with the auto pack, then Rajdeepak figured M&M for us. M&M is one of the stocks that, for the past few months hasn't performed well, but it is also something that's on the radar for all the analysts from the auto pack. What do you see in the charts for M&M?
Yeah, exactly. In last couple of months, while the broader market has significant volatility, M&M has shown significant resilience. So on one hand, we have seen a couple of names which are moving higher, but M&M has already outperformed in last 6 months, and after that it has moved into this consolidation band. What we believe that going ahead, M&M can start moving further higher, and perhaps it is likely to move towards 3400 levels in the coming weeks. What we believe that 3100 is the level below which it shouldn't move, and that should be the stop loss for the M&M.
Well, pretty interesting about that. Raj, I'll keep you busy. One more query is there, that is Bajaj Finserv. What are the important technical levels looking like, and is there any good risk-reward ratio here?
See, financials are particularly under pressure, and if we just ignore what is going to happen tomorrow regarding the monetary policy, then perhaps we might witness further sell-off in the financials name across the board. We have witnessed short additions in the bank nifty as well as in the financial names, in the NBFCs particularly. So what we believe that after this consolidation, it seems to be broken down on the lower side. So below 1930 odd levels, the next level it seems to be somewhere close to 1800. But considering, as I said, tomorrow's monetary policy, perhaps it would be better if one can go short with a hedge position. That means buying call option and short futures, or anyway, one has to make a negative position, but with a proper risk and reward here.
All right, so that's Bajaj Finserv on the charts. But let's move on to the counter that is reeling under selling pressure right now, though has recovered from the day's lows, but nonetheless trading with cuts of more than 1.5%, and that's DLF after it's posted its Q1 numbers. The net profit is up 18% on a year-on-year basis at 763 odd crores. The revenue is also seeing an uptick of 99% on a year-on-year basis at 2,717 crores. Margins also see an expansion of almost 59 odd percent on a year-on-year basis, and the margin, EBITDA margin, is also is the one that is seeing decline at 13.4% versus 16.8% on a year-on-year basis. So there is a decline coming in on the margin front. On the back of that, DLF is reeling under selling pressure of cuts of 1.6%.
Well, yes, despite steady quarter, stock getting punished. But moving on, BML is in focus, and Kanishka will give out the details. Is there some order flows or technical tie-ups coming in from this sector?
That's right. An order win coming for BEML. It has got an order from the Ministry of Defence for the supply of high mobility vehicles, that is HMV 8x8. The contract is valued at 282 crore rupees. Now remember, this is coming just a week after the company already announced a separate 293 crore order for HMV 6x6 units, which are all-terrain vehicles used for personnel movement and general service roles by the Indian Army. BEML has, apart from that, also entered into an MOU with Tutor Hyperloop, which is a deep tech startup incubated at IIT Madras. This is to jointly develop a prototype of high-speed transportation system based on Hyperloop technology. Now, according to BEML, this technology, that is Hyperloop, is a transportation system in which passenger or cargo pods move through sealed tubes in a near vacuum environment using magnetic levitation and linear induction motor, that is LIM propulsion systems. So these are the two announcements that have come from BEML, and after the announcement, the stock has been trading in the green, holding up about 0.5% higher.
All right, on that note, Kanishka and Rajdeepak, thank you so much for taking the time out and giving us all the buzzers. We will let you go on that note. But all eyes are on RBI's MPC meet this week. 77% of economists still expect a rate pause, down from a 97% earlier. But odds of a cut are rising, with inflation at a 77-month low and US tariff risks looming. GDP growth has slowed to a 4-year low, though the RBI still FY26 growth at 6.5%. My colleague Shesha is joining us with what to expect.
Well, yes, first up, let's take you through what the broad expectation is from the MPC outcome this time. And 77% of polled estimates do not expect a rate cut this time. But the odds of rate cut have risen after the 25% tariff on Indian goods that was announced by US last week. So odds of rate cut have clearly risen over the last few days. Now, earlier, 97% of the polled economists expected status quo, that is no rate cut, but that has fallen now to 77% after the tariff announcement that came last week. Let's also take you through where the rates stand currently. So repo rate currently stands at 5.5%, SDF rate at 5.25%, we have SLR and CRR at 18% and 4% respectively. So this is where the rates stand currently, and all eyes will be on outcome from the MPC meet tomorrow. And to put things into perspective, we have IIP, which currently stands at 10-month low, CPI at 2.1%, which is at 77-month low, and demand concerns continue to loom large for the entire economy, and that will be one of the factors to consider when we consider the MPC meet outcome tomorrow. Now, India's GDP growth stood at 7.4% in the fourth quarter of FY25 and at 6.5% for the full year FY25, which remember was at a 4-year low. Let's also talk about estimates for GDP for FY26. RBI is penciling in 6.5% forecast for GDP for India for FY26, IMF at 6.2%, World Bank and S&P Global at 6.3 to 6.5% respectively. So the broad range for FY26 GDP estimates is anywhere between 6.2 to 6.5%. Meanwhile, as far as CPI estimates are concerned, April, RBI expected FY26 CPI inflation to stand at about 4%, which was then lowered to 3.7% in the month of June. That is the last MPC meeting. And as far as GDP estimates are concerned, remember in June, RBI's GDP estimates suggest that fourth quarter could stand at about 6.3%, and for the full year FY26 GDP could come in at about 6.5%. So that's the large backdrop of the economic landscape. But for now, looks like we will not see any rate cut this time.
All right, wait and watch out for what the MPC meet outcome looks like tomorrow. We'll keep you posted on all of that. But with that, it's a wrap on this edition of Market Fatafat. I'll take a leave. Thank you so much for tuning in.